Hello everyone. Today I'm going to discuss on the monetary policy of the Greece. Greece, as a member of the Eurozone, does not have any independent monetary policy, but it follows the monetary policy set by the European Central Bank (ECB). The ECB's primary objective is to maintain price stability in Euro area, aiming for inflation rate of below but close to 2% over the medium term. So the main term of the like the key monetary policy tools are interest rates, open market operations, reserve requirements, forward guidance, and everything and etc. So interest rate, the ECB sets three key interest rates for the eurozone: the main refinancing operation rate, the deposit facility rate, and the marginal lending facility rate. These rates influence the cost of credit and the return on saving, impacting economic activity and inflation. Second is the open market operation. The ECB conducts open market operations such as the purchase and sale of security to managing the liquidity in the banking system and influence the interest rates. Third is the reserve requirements. Banks in the Eurozone are required to hold reserves in their accounts with the National Central Bank. The ECB can adjust the reserve requirements to influence the amount of money that banks can lend. Forward guidance, the ECB uses forward guidance to influence the financial and economic expectations of markets, households, and business. Fifth one is the quantitative easing and the pandemic emergency purchase program. So in response to the financial crisis and the COVID-19 pandemic, the ECB has implemented the asset purchase program to support economic activity and stabilize inflation. So Greece's membership in the Eurozone, its monetary policy is significantly influenced by the ECB's decision. The Bank of Greece, the country's central bank, implements this policy with the Greece and the participates in the decision-making process of ECB. So let's come to the economic overview. Greece's economic has shown resilience with significant improvements in its credit ratings and a positive outlook from rating agencies. The stock of the non-performing loans (NPLs) has been reduced, contributing to the banking sector's profitability. However, the high ratio of NPL is to total loan highlights the need for continued vigilance. Second is the monetary policy impact. The tightening of the monetary policy beginning in 2022 led to increased bank interest rates. Despite this, Greece's economic activity has been affected by slowdown in economic activity and rising interest rates, leading to a contraction in bank credit to non-financial corporations and households. Another is the banking sector. Greek banks have seen improved profitability and a reduction in non-performing loans. However, capital adequacy ratios have slightly fallen, remaining below the euro area average. Thereafter, there is a risk and challenges. Risk to the economic outlook includes external environment, deterioration, and higher inflation, delays in the implementing reforms, and potential increases in the interest rates. Challenges includes achieving investment grade for the Greek economy, reducing the high public debt to GDP ratio, and managing the current account deficit. So as per the IMF projections, the IMF project Greece's real GDP growth at 2.0% and the consumer prices to increase by 2.8% in this year, like in 2024. The country's economic health indicators reflect ongoing recovery efforts and the impact of the monetary policy. Another one is the ELA, like Emergency Liquidity Assistant. So what does it mean? ELA refers to the an operation whereby a Eurosystem national central bank provides central bank money and the another assistance. Like emergency liquidity assistance is a crucial mechanism in the monetary policy framework, particularly for the countries like Greece during the financial crisis. It serves as a lifeline for the solvent financial institutions that face temporary liquidity issue but are otherwise healthy. The ELA allows this bank to access central bank money outside of the regular monetary policy operations. This assistance is provided by National Central Bank and within the euro system and is aimed at ensuring the financial stability by preventing the collapse of the solvent banks due to short-term liquidity problems. The UECB plays a significant role in overseeing the provision of ELA, ensuring that it does not interfere with the objective and task of euro system. Although the national central banks such as Bank of Greece extend a ELA, the ECB's governing council has the authority to restrict these operations if they are deemed to conflict with the broader goals of Eurosystem. The council can make such decision within two-thirds majority vote, highlighting the collaborative nature of this oversight process. There are few terms like cross-border use of collateral. So the Eurosystem facilitates the cross-border use of collateral, allowing Greek banks to utilize assets held in Eurozone country for liquidity purpose. This is made possible through the CCBM, enhancing the liquidity management efficiency. What is that CCBM? CCBM acts as a bridge enabling national central bank to manage collateral across borders on behalf of one another. This system ensures the Greek banks can effectively leverage their eligible assets irrespective of their locations within the Eurozone. Another is that Eurosystem Credit Assessment Framework, ECAF. The ECAF ensures the standardized approach to credit assessment across the Eurosystem. It provides a uniform methodology for determining the eligibility of collateral based on credit quality of assets, thereby ensuring consistency and risk control. So eligible counter it like we can say that Eurosystem's collateral framework, including CCBM, like CCBM is the uh, correspondent central banking model, and ECAF, that is the Eurosystem Credit Assessment Framework. So we can say that the Eurosystem's collateral framework, including the CCBM and ECAF, plays a crucial role in supporting liquidity and financial stability. By allowing a broad range of assets and ensuring equal treatment of institutions, the Eurosystem enhances the resilience of the banking sector across the Euro area, including Greece. So thank you so much.